So for me, this is the hierarchy of time frames. Lower time frames would give you weaker signals, more impulsive moves, but then you're able to react to the prices fast. Bigger time frames, on the other hand, give you more definitive signals, stronger signals, then potentially bigger rewards. So when analyzing on price action, it usually goes like this. You look at the 1-day chart, but then if you see a setup, if you want to understand the bigger picture, you can go on the 1-week time frame. And in the 4-hour chart, and if you want to go intraday, you can go into the 4-hour chart, then 1-hour chart, and then you could go to the minute charts if your execution framework is based on more quicker signals, if you want to see the micro moves. But for me, it's enough to just understand the day charts, the weekly charts, and then probably 4-hour to 1-hour charts. And in the PSE, you don't even have to go intraday too much. Not unless you're really a full-time trader. You're really dedicated to capturing all the small swings in the market. But then in the global markets, what I've realized is that it's more applicable to use these smaller time frames. So I find myself looking at 4 hours to 1-hour charts more often, because there's tons of micro opportunities within the day-to-day swings in the global markets. All right. So I'm going to give you an example of how do you put into context the different time frames when you're looking at a single stock. So here we're looking at Ayala Corp, AC. So we see here that there's a recovery from the recent bottom, and then we're consolidating a bit. So you're going to see you're going to see a quick consolidation here, small consolidation. And then looking at our trend filter, it's below the 50-day EMA. 20-day, on the 20-day, it's still above. So there's still short-term momentum, but then it's having kind of a hard time going above our medium-term trend filter, right? So now, if you want to put into context where we are at AC's life, if you want to understand the more big picture of things, the bigger picture, then just go to the weekly chart. And then you're gonna see here that, okay, there's a resistance. This is a major support at 500, but then you also see here that the previous major breakout point of AC since 2007 to 2012 is at the 400 range, 400 to 430, around this area. So if you're familiar with support and resistances, right? Major breakout points or major resistances can turn into major supports when the price goes back after a long uptrend. So it proved to be correct at this point. With that extreme crash, we see the price recovering around the 400 area. And now, okay, we know that it recovered on that major support, but on the short term to medium term trend, we're not yet totally given a clear trending signal, right? So we go back to the day charts. So we see this 5 to 10 day pattern. So if I were trading it as a momentum trader, example, you want to shift to, let's say, 1-hour chart. So as a momentum trader, what trigger points would I wait for? Okay, so let's put in the range, identify the range first. So we see the stock is having that consolidation on the highs. Now, if there's two approaches to this. It's either you believe that this is a good dip opportunity already. So whenever the price nears 550 or 560 area on this support line, on this baseline, you could buy some shares, and then you're going to have a quick stop loss. If the price suddenly breaks around this area, then you could have a quick 3-4% stop loss. So that's if you're buying into the support, if your style is to buy into supports. But if you like more confirmation, if you want to buy only when there's momentum, if there's a breakout, then you can buy on the top part of the range. So example, the stock goes above 580, then closes above 600, 610. Then that's where you can input your entries. And then just have a wider stop below this range, whether that be a 5% stop or a 6% stop. Once the pattern is broken, if it goes below the breakout, the pattern before the breakout, right? So there's always two approaches to trading, and there's actually lots of approaches, but in this example, we try to simplify it between buying on breakouts and buying on supports, right? So that's how you could use the 1 hour chart. Is it necessary to go 30 minutes or 15 minutes? For me, no. It's actually almost the same. If you understand the price structure on the bigger picture, you're going to see that it's pretty much the same, right? So here, it's still the same range between 550 and 600. And again, if you know your price triggers, then you're just going to move and react when the price hits on these triggers. So whether we're using 1 hour or 30 minutes, there's not much difference. Okay? Not unless you're really analyzing that micro move, but for regular traders, there's not much difference. And even if you go to the day chart, it's still the same range, right? So it's still the 550 to 600 range. Then depending on your approach, whether you see this as a good dip, then you can buy near the support, or you want to wait for momentum, then you could buy on confirmation, buy on the breakout. So that's just two examples. Now, of course, intraday charting has its uses, especially if the stock moves a lot, or if the stock is in a very wild scenario or extreme movement. So you could use that on special scenarios. But what I'm pointing out here is you don't have to focus too much on the micro moves. Just having a good understanding of the day charts, the weekly charts, and the 1 hour time frame for micro executions would be good enough to help you on your trading. All right. So that's it for our discussion on time frames. I hope that it helped you and give you a comparison of how different approaches on time frame settings, or whether you use it for indicators or whether you use it for analyzing price action. I hope that you see the contrast between being too short-term oriented or being more longer-term oriented or medium-term oriented. So I hope that you see the difference here. So the rule of thumb is there's not really a perfect time frame setting. So again, if you study all of these different approaches, what matters is finding the right time frame settings that would fit your life, that would fit your personal style as a trader, that would fit how natural it comes to you when you execute. Because of course, busy people cannot react on the spot on shorter time frames or too quick signals, right? So if you find yourself being busy in your day-to-day life, then you could adjust to more medium-term or longer-term time frames, and that's not a problem. But if you're an active trader, you're monitoring daily, you have the time, you don't have work, you're just lying around in the house, you can focus on the micro movements, then go ahead. Now it totally depends on you, right? So just to reiterate, lower time frames would allow you to react to the micro movements, giving you more trades and potentially compounding your profits if you get it right. So all of those 4%, 7% trades, if you compound it, can go a long way. If you're really that micro swing trader or scalping approach kind of trader, then that can work as well if you're more on the quantity side. But if you want to have a more relaxed approach, something more realistic to real life, then you can use a more medium-term to long-term approach and just wait for the signals patiently to come at you. You don't have to force it every day to find these trades, right? So in my experience, most of the big trades develop on the more medium term and long term price structure, right? So I don't focus too much on let's say 5% on trades that only give me 5% or below. So the big trades, the big money really comes in if you're able to capture a trend, it goes above 10, 20% and then continues to trend upward. So that's my favorite kinds of trades. All right. And then and then lastly, there's not much difference when going into the micro details of the charts. So again, just what I showed you a while ago, the important thing is that you understand the context. On the 1 day chart, what range do we have? And then if you zoom in to 1 hour, you're gonna just see the more definition on that chart. And then going to the minutes is not too necessary, not unless you're trading a real volatile instrument that would give you a lot of micro opportunities within the minute charts. All right. But again, the last message that I'd like to leave out to you is the bigger the time frame development, or the bigger the time frame settings that you use, and once the price or the indicators gives you confirmation on that major time frame, then the bigger the potential move as well. So that's something you have to take note of. All right, so I hope that you guys enjoyed this video. For more learning modules, learning content, feel free to visit us in Investagrams, subscribe to our YouTube, and visit investagrams.com/learn. We have tons of free content out there. I hope that we added value to your trading journey today, and stay tuned for more.